Today's short focuses on big developments in the sterling US dollar exchange rate. The external value of sterling against the US dollar has fallen to the lowest level since 1985. £1 now buys only $1.14 in the currency markets, and the pound has fallen or depreciated nearly 22% during 2022. Well, here's a chart showing the pound-dollar exchange rate since 1999, and you can see that just before the global financial crisis in November 2007, £1 could buy over $2. Well, we're a long way from that now. So why is the pound falling? Well, here are four reasons. First of all, global investors, tend to buy dollars at times of global economic and political uncertainty. Clearly, we're in that position now. Secondly, the US Federal Reserve, their central bank, they've been raising interest rates more aggressively than in the UK. And that's causing some hot money to flow to the States looking for the best interest rate, the best rate of return. Thirdly, there are significant worries that the UK economy is entering a deep recession. Now, currency investors tend to sell the currencies of countries that they think are heading into a downturn because the rate of profit, the rate of return from those countries is likely to drop. And a wider point is that investors are nervous about the UK government's plans to allow their borrowing, state borrowing and national debt to surge by many billions, tens of billions, to fund their energy crisis plans. So why does a slumping pound matter? Well, in theory, a falling pound makes UK exports of goods and services cheaper overseas, and that's good news for exporters. But it also makes imports dearer, putting upward pressure on an already high inflation rate. Now, this in turn might persuade the Bank of England to continue raising their interest rates as a counter-inflationary measure, which then risks making our recession even deeper. And a weak pound affects both businesses and households. You see, higher import prices will drive costs upwards for businesses and hit millions of households with even more expensive food and energy bills. A weaker pound tends to cause the real wage or the real purchasing power of your income to go down. And even with the pound falling, British exporters have yet to see a significant boost in sales abroad, in part because other countries are experiencing slower growth themselves, and also the damage caused by the post-Brexit introduction of numerous non-tariff barriers. The pound is slumping. It's falling. Will it reach parity against the US dollar? Well, possibly. Why does it matter? It matters, I think, because a weak pound is indicative that investors think the UK economy itself is weakening at the moment.